So hey everybody, welcome back to my channel. Deb's Corners, Deb here. So wanted to say welcome. If you're a new subscriber, welcome. If you're an old subscriber, hello, how you doing? So in this video I wanted to talk about asset allocation, basically diversifying your portfolio. So basically diversifying your portfolio. Before I start this video, I just wanted to mention that I am not a financial advisor. In all my finance videos that I have on here, I always mention the same thing that I'm going to mention now. Always get a first, second, third, fourth, fifth opinion, and always do your research. What I aim to do here is to kind of introduce topics, right, where you guys can then go and do your own research or speak to a financial advisor to get more information on the topic I introduced. One of the things of how I learn in life is by speaking to people from different demographics, different traditions, different walks of life, to just kind of get an insight or to just be introduced to topics that I would not have been aware of if I didn't speak to them. So I like introducing topics and I like going deep, going in depth with topics that I introduce or that have been introduced to me. This is what my finance videos on this channel does. It introduces topics, and I also talk based on my experience as well, but it introduces topics where you can go and then do your own research or speak to financial advisors to get more information on that. So I talk based on my experience. So with that said, let's get into the video. So like I mentioned, in this video we're going to be talking about asset allocation, basically diversifying your portfolio. First of all, what is asset allocation? Asset allocation, basically asset allocation, allocating your assets in different markets. That's essentially why asset allocation is important, is because it balances your risk and your rewards under different market conditions. So if you're losing money in one area, you're making money in the other area, and you're still trying to get to a certain goal. So most of the time when people allocate their assets in many markets, they most likely have a financial goal in mind when they're doing that. So for instance, if you're in your 20s and you have a goal to retire at 65, or even less, right? But you have a goal to average retirement age 65. So you have a goal to retire at 65. You're in your 20s. And you have a set goal, financial goal of retiring with $1 million, right? And you have a fixed income in mind to live off when you retire. And so say for instance that fixed income is $50,000 a year. And that $50,000 covers health, it covers food, it covers mortgage, it covers rent, it covers clothing, it covers health costs. All that is under that umbrella of $50,000. So it covers that. So that's your fixed income. So at that rate, your financial goal, let's go over it. $1 million saved to live off after you retire. You want to live off the fixed income of $50,000. You're in your 20s. So you have that in mind. So most Americans have an average lifespan of 78 years. So if you're 65 and the average lifespan is 78, that's about 13 years to live. Not saying that you would die at 78, or you may live longer, but what you tend to do is just to focus on the average and then plan for anything over that, right? So that's about 13 years, good years, right, of living on $50,000 a year. So $50,000 times 13 will give you $650,000, right? So that's way below the $1 million goal that 20-year-old has in mind, right? But to have a financial goal in mind means that you're working towards that goal, right? So at 20, you know you have to save $1 million. You want to live on first income of $50,000. And so you start saving for that. The good thing about starting or having a financial goal when you're in your 20s or even earlier is that you have time on your hands, right? Your age matters when you're talking about asset allocation. Age, time matters. Also, your risk tolerance matters. and your financial goals matters as well. So, but the most important one, time, age. So you start aggressively saving towards your retirement, or you start saving towards your financial goal, and you need areas that can grow your money or your assets pretty rapidly, I would say, and also rapidly, but also aggressively as well, because in your 20s you're more aggressive. You'll probably be more aggressive with your allocations than you would when you are in your 40s or 50s, because you're getting closer to the retirement age. So you start doing that aggressively in your 20s. That means your asset allocation, or the way you allocate your assets, will be a little different from the way a 40-year-old or 50-year-old will allocate his or her own assets. So that's what asset allocation is. So we'll go from there. Why asset allocation is important. Again, I mentioned it just helps you to reach your financial goals, right? It's also important because it allows you to not throw all your eggs in one basket, right? It's kind of with anything, right? If we're just talking about just the stock market, just focus on just one sector of the market, right, and disregarding the other sectors can be detrimental. If that sector is having a bad month or bad 3 months, you can actually lose a whole bunch of money. You can lose all your money. So diversifying your portfolio, basically allocating your assets. We're just talking about stocks right now. Just putting some money in the tech sector if you're focusing on tech, and then putting some money in consumer discretionary if you're focusing on that. Balances out your portfolio, because remember, asset allocation is all about balancing your risk and your reward. You want a balance there all the time. So that's the goal of asset allocation. So now there are 3 types of investment choices that you can make. We have the stocks, we have bonds, and then we have cash or cash equivalents. Cash or cash equivalents are basically saving deposit accounts. We have money market funds, money market accounts. All those stuff fall under the cash or cash equivalents, right? Essentially, you can just go and pull out cash, right? It can turn into cash quickly. So those are the 3 types of investment choices, and those are the 3 areas where you can actually allocate your assets as well to encourage growth. So the younger you are, the more likely you are to reach your financial goal, right? Because you started early. So time, age matters a whole bunch. I'm going to keep on saying that over and over again. Time and age matters a lot. Again, when you allocate your assets, risk tolerance matters, because the way you would allocate your assets determines your level of growth, right? And the speed of growth. So if you're somebody with a high tolerance for risk, you'll probably aggressively invest and allocate your assets, and you basically get great returns, or you may lose greatly too. It depends. But risk tolerance matters when you're allocating your assets. So for initial asset allocation, I would advise you to speak to a financial advisor. I think they can help you first with that initial setup of just dividing and allocating your assets in different areas that would just grow your assets in the rate that you want it to grow. So speak to a financial advisor for your initial allocations. Once that's set up, life changes, things happen. You can always switch things up whenever you want to. But that initial one, please talk to your financial advisor. So yeah, that is all that I have to talk about as it relates to asset allocation. Very important. The message is to not have all your eggs in one basket. And a very important message is to just always balance risk and reward, always. And that's with life too as well, right? So a good lesson to carry on. So until my next video, I'll see you guys soon. Take care. Bye.